Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday, and we're now at the 23rd of March, 2021. Doing a lot of things. For those of you that do get my morning SPDR ETF videos, we have found a piece of software for the morning one that we think accomplishes the look we want in a very quick period of time to get it posted, along with the quality that we want, two parts. So I think I'll be able to cut down my recording time by about 30 minutes. The content will be the same. The rendering is what's going to change dramatically, and I think you'll see that on our website, 123. All right, we have to give up a shade of the quality that we would, like in my charting course and my other courses I'm putting together, but I think it's worth it. I want to get these out to you first thing. So when we look at the market behind me, a lot of red here. Today was the day that we got to hear from Fed Chair Powell and Secretary of the Treasury Yellen. Miss Yellen wants more taxes. That's how they're going to pay for things in the Biden administration. And we have to remember what she is. She's now part of the Biden administration. She no longer wears that cap of being a Fed chair. Mr. Powell, the Fed chair, keeps looking at unemployment, and he is looking at other things like inflation. Those are his two mandates. He does not see, and he says this over and over, inflation being a problem, period. He is more concerned and very concerned with the employment and getting people back to work. That is what will right everything as he sees it. So we're going to get more taxes according to the Treasury Secretary. She's for that. Doesn't mean they'll get through Congress, but that's what she's for. And the Fed chair doesn't worry about the inflation scenario coming on, even with the wave that we'll see. And he admits we'll get a wave of it to start. Nothing dramatic, but it's going to move up, and then he expects it to recede. I've just saved you a lot of time in watching TV. Now in GameStop, we've been looking to see if the market could fall back because of the pattern to the 18-day average, which it finally has. Now the game begins. As of going home, the market turned bearish. Until the market gets back over 227, you have the swing line down, the bias is down since you're under the 18-day average, and momentum is pointing down. A target, if it can continue down, could be half of its price at 83.11. I have my doubts that it'll get there. We noticed yesterday, and I brought it up here, I said, you know, this is a bit disheartening. They opened up all the movie theaters in LA. They've opened them around the country. Most of the theaters are now open. And I'm watching AMC when it comes in, and it's down. Well, you broke the trend. You got through 1234. If momentum turns down here, and you had an 80.33, with today it turned down, the next stopping spot, that line in the sand, the 18-day average of closes, that's just what this market actually did. The next thing we want to look at is PAVE. Now, why do I like PAVE so much? Well, if the Biden administration is going to be able to get through infrastructure spending, this could be one of the winners, and it gives you an idea if it could happen. So we had that run up where it looked good, and now it's pulling back. This is a lot on the come. Understand this. I'm not too worried about anything other than looking at what is the sentiment towards it. And it's not good right now. I think the market is saying, it's not going to be easy to get that through. Lower highs, lower lows, that's a downtrend. You're under the 18-day average for the first time. That's bearish. So two of the three elements are bearish here. Where are the Bollinger Bands? That's a possible target if momentum's down, and guess what? It just turned down. So I think the bears took control of this. I think there were sellers up here in the 23.94. My guess is if you get over 24.51, they back away from the market. But without that, maybe the lower Bollinger Band becomes one of the downside targets. In THCX, same thing, and unfortunately getting high. It peaked way up here. You do realize it's cut its value, nearly 50%. It's throwing out new bear signals. So the lower highs, the lower lows, will that market make it down to that 1814 area? Should be an interesting event to look at. I have one of my neighbors. He's in the business of building the factories that they grow this in. And they are all controlled. They're about 100,000 square foot factories. He's a contractor, and he's the contractor. So he's the one that does the building and brings in all the subs. And I just know it's been a rough go because he takes a percentage of so many of these companies. Why not, if you're building them, to do that? SMH, higher lows, higher highs. The market sitting at the 18-day average. Okay, I think the pros went long here. The market is not in overbought territory. Their stop probably the 28.79 level, 228.79, I should say. If you can clear the 241.82, I think they'll be looking in the 248 zone. In the industrial sector, this backed off, so you didn't get much of a play here. You lost the embedded reading yesterday, and what do I tell you? If you can't get it back right away, the odds are you're going to that 18-day average of closes. Bingo, didn't even waste time getting there. In the XLE, this is what you call a vertical price decline. So this market just lost about 12% of its value, just like that. I think it's oversold. I think it'll find its legs against this 47.09 level. That doesn't mean I'm telling you to buy. That's where I think it'll find its legs. QQQ is without trend. You have a higher high, lower low, whipsaw action, even in momentum, not going anywhere up or down. And in the emerging markets, back under the 18-day average. What have I said in this trade since the beginning of the year? One of the more popular trades that I saw every analyst want, it has gone nowhere. I mean, you've missed nothing since January 1st. It has not been able to break out of this one way or the other. I think it will, in the end, when the COVID vaccines make it through the economies of Europe and India and other parts of the world, many of the third world countries, got to get that done. But we're nowhere near that. And trying to make something that isn't going to happen right now, that's very difficult as I see it. Gold is overbought. Now, the futures are looking interesting. They're at their 18-day average of closes, and they've pulled back quite a bit. But this is not saying to buy it. This is overbought as can be. So I'd be a little bit cautious in all these. I don't see anything to do on that chart. I've been telling my traders and the miners they don't want to be long. I said this was a nice run-up, but I think it ran out of momentum, and little did I expect it was going to instantly get back to the 18-day average, but it has. TLT, I will not be surprised at all. In fact, I expect that we're going to hit the 18-day average of closes tomorrow, and that's where we'll see what the market's going to do next. This downtrend went into a big pause, maybe more than that. Maybe it's run its course for the near term. So that's something else to think about. Last in the euro, there's just nothing going for it. They're arguing amongst themselves. How do they get vaccines? How do they stop exports out of the countries where it is manufactured so that the companies have to give it to that country or at least meet the quotas that they've promised? And that's the problem. There's a lot of promises on these vaccines that aren't being met. It's a real problem, and you're seeing that. It doesn't help their economy that in Europe, you've got England. You've got, well, I don't even want to count that one. I'm going to count France, Germany, and Italy. The UK I'll count out of it right now because they're doing better than most. But the other three that I just mentioned, they're in lockdowns again. How do you get bullish that when the power drivers of the EU are going back in lockdowns? You don't have to be a genius. You don't have to go to business school for this, all right? That's what the market is telling you at this point, and pay attention to things like that. I want to remind you that we write about all this. So I know you're going to tell me you're a SPDR ETF trader. Trust me, when you're trading a SPDR or an ETF, and they're based on the futures contracts and the notes and the bonds, or the S&Ps, or the QQQ is based on the NASDAQ, you want to read what the futures boys are doing. Why? They're trading 23 hours a day. That is what it's based on. So why not take advantage? Take a look at what we've got. Go to our website. It's a free offering for our market information, or call our staff. They'll gear it just so you only get what you want in the information. You won't get the things you don't necessarily need. I'm Ira Epstein. Thanks for watching. I'll see you tomorrow.